David Burrows is our guest on this edition of Market Call from Barometer. He's brought with him 3 fresh top picks, all U.S.-based, as we've been discussing through the course of the program. That's where he favors. MasTec, MTZ in New York, top pick number 1. Yep. Why?
So first of all, we spent a lot of time over the last couple of years talking about very large cap. I think we're moving into a market where you're going to see some outperformance from some mid-cap stocks, U.S. domestically focused. MasTec is about a $4 billion market cap, so it's actually more smaller cap in the U.S. world. But MasTec is a construction company contractor in 3 basic areas. One is oil and gas infrastructure pipelines, electric transmission and power generation, and then communications. Okay, so this is a company that builds out infrastructure. It's a company that is benefiting, of course, as the communications companies are building out additional gear onto all the towers that American Tower would own, another company I really like. We know that there's been a bunch of new pipeline capacity approved and will be built out. They will be major players in that. And when you look at what's happening with electric cars, possible we're going to need some additional generation and transmission capabilities, and they're in all of these areas.
I'm looking at it compared to its peer group. Its gross margins are 200 basis points above everyone else. Its return on equity is literally 10 percentage points greater than everyone else as well. Where do you see it a year from now on a stock that doesn't actually pay a dividend?
So this is a company that I've actually talked about before on the show a couple of years ago, and we just think that this puts you firmly within the infrastructure theme. We're not dependent on Trump spending a lot of money because we think that these are secular themes that just aren't going away.
Another theme that you don't think is going away anytime soon is the U.S. Housing market, and D.R. Horton's top pick number 2 in that space.
Yeah, so look, D.R. Horton is the largest home builder in the world. They operate in 27 states. They've got $12 billion in revenue, and we're seeing new home sales grow at greater than 10% in a majority of U.S. states. Okay? So when you look at the inventory of new homes, going back to 1988, we're just off the lows. So the problem has been not enough homes. D.R. Horton sells into the entry-level buyer, and we know that the millennials are just starting to buy homes. So we think that if you have a prolonged economic slow expansion, there's a pent-up demand, just like there was 5 years ago pent-up demand for new cars, there is pent-up demand for new homes.
The whole lumber dispute right now has some telling me that this will add $3,500 to the cost of a new home in the States, and that puts 100,000 potential American homeowners out of the market.
That's true, but there's like 9 million millennials living in their parents' basements, so I'm sympathetic to that. But in the end, we're not looking for all of them to buy homes. These are not expensive homes. These are home sales in the $150,000 to $250,000 range. So you know, it's not a huge ticket.
Top pick number 3, Broadcom. I guess this is Internet of Things oriented?
It is, and so, you know, AVGO used to be called Avago, now Broadcom, and this is a company that plays into the new iPhone theme. They expect to have 40% more content in the new iPhone than they had in the last iPhone. They make RF chips. RF chips are going into everything. And what's interesting is they are the only semiconductor company that has a long-term contract with Apple. They have a 3-year contract to provide. Tells you how important they are to Apple. So the Internet of Things is real. It's going to continue on. We're going to build more connected devices, and Broadcom is a company that participates in that.
What do you make of the $278 price target?
I think that there is room to run in this group. I'm looking at this as a multi-year theme. Right? Remember, the hardest thing in a bull market is to stay invested. We're very focused on being good sellers when things get difficult, and we do. But the difficult thing is that things that look expensive today in a bull market become more expensive tomorrow. And so you try not to get shaken out by things that look expensive when maybe the estimate is just too low.
Thank you, David, for your time.
Thanks for having me.
David Burrows has been our guest, President and Chief Investment Strategist at Barometer Capital Management. That's it for this edition of Market Call. The replay on BNN.ca in a few moments. The encore presentation airs Monday through Friday at 10 p.m. Eastern, 7 o'clock Pacific. Of course, we're also live Monday through Friday at 5:30 p.m. Eastern Time for Market Call tonight. As always, please consult a qualified financial advisor before making any investment decisions. For Andrew Bell, I'm Michael Hainsworth. Thanks for joining us. We hope to have you with us next time.